In nature, size matters, but maybe in finance it doesn't, because a $12 billion company just made a bid for a $56 billion one.
It's a bold strategy, Cotton. Let's see if it pays off.
GameStop wants to buy eBay. Unsolicited, unannounced. Ryan Cohen didn't even call them first. eBay found out the same way you did. So here's the way the deal goes. It's $125 a share for eBay. Half of it cash, half of it GameStop stock. Try to say that 3 times fast. I've been trying this so much. They've been quietly accumulating a 5% stake since February, buying through derivatives and common shares and stuff like that. Now remember, once you cross 5% ownership of a publicly traded company, you have to file a 13D for if you're going to be active, or 13G if you're passive, with the SEC, letting everyone know that you're there. So Ryan Cohen, the CEO, filed it yesterday, May 3rd, whatever it is. He has to do that because that's the law. The offer represents a 46% premium to where eBay was trading in February, and a 20% premium to where it closed on Friday. eBay's board said they'll review it. They also made sure to mention publicly that nobody from GameStop called them before this landed on their desk. That's a hostile bid. Because a lot of times when you hear about bids for companies, they've worked it out with the boardrooms. Everyone knows they kind of negotiated. This one is like, hey, by the way, we're taking you over. So Cohen's idea, I guess, is to have the 1,600 GameStop stores become eBay drop-off and shipping spots. And they're going to have live sales broadcasts right from the GameStop stores. So in January, he told CNBC there's going to be some big deal that's going to be transformational, never mentioning that it was eBay. And it's going to be something that was never done before with the history of capital markets. It's going to be really, really big. Really, really, very, very big. He was not lying about the size. So now let's think about it. GameStop has roughly $9 billion in cash, which is a lot. They got a highly confident letter from TD Bank for $20 billion. That's $29 billion. The deal is $56 billion. Andrew Ross Sorkin did the math on live television, and he goes very patiently, like he was explaining to a toddler, you have $9 billion on your balance sheet. You have this letter from TD, that's another $20 billion. We're now at $40 billion. We're still off by 16 or 20 billion. And the TD letter, it's a highly confident letter, not locked in finance. Cohen's response, yeah, we'll see what happens. Sorkin tried again. I'm just trying to understand where the rest of the money would come from. Cohen goes, I don't understand your question. He said that twice. Becky Quick jumps in and goes, wait, you're on our air. We thought we get. He interrupted. I don't understand your question. The full details he explained are on the website.
Serious, man. You cannot be serious.
He flew to New York, sat down with Squawk Box, and told 3 of the most recognizable anchors in financial television to go read the website. That's a bold strategy. So here's what he did say about the financing. He will issue more GameStop stock, I can't say that, to close the gap. That's called dilution. When a company issues new shares, existing shareholders own a smaller percentage of the same company, more slices of the same pie. That's why GameStop dropped 10% today. The shareholders who already own the stock are looking at a deal that could require massive new share issuance to get it done, and they're not really happy. Meanwhile, eBay popped about 5% to 109. Remember, the offer is 125. There's a $16 gap there. That's the market telling you how likely they think the deal is going to close. They're not sure. The prediction markets have it at about a 15 to 20% odds. And then Cohen said, if eBay's board doesn't engage with him, he'll take the offer directly to the shareholders, a proxy fight. That means going around management and appealing directly to the people who own the stock. He's done aggressive before. He's turned GameStop from a dying mall retailer into a company sitting on $9 billion in cash with no debt. But when a reporter asked him how a $12 billion company buys a $56 billion one, and the answer is, check the website. That's not a financing plan. That's a press release. God, it's crazy. This might not be close. The market clearly thinks it probably won't, but Cohen just put eBay in play. Other buyers could emerge. eBay's board now has to respond. They have to by rule. eBay shareholders now have a number in their head, 125. Sometimes the fish doesn't eat the whale. Sometimes you just blast it out there and we'll see what happens.